Hi, my name is Michael Shelbeck. I'm with YIS Benefits. I've been a licensed insurance agent since 2009. Now with everything going on, there's been a lot of misinformation that I've seen a lot on Facebook. I wanted to make a quick video just to give you an understanding of the different types of insurance products that are available, who should use what, and why. Now, as you'll see, these are the three most common types of insurances that you're currently seeing on the market. A lot of people are selling these indemnity plans. You don't know that they're called indemnity plans because they don't tell you that. What they tell you is the plan has a $0 deductible, no co-pays, and no co-insurance, leaving you to think that you have full coverage. But in reality, as I go over it, you'll see very quickly, it really is far from full coverage. Then we're going to go through short-term medical and as well as ACA type of insurance, which is also known as qualified major medical insurance plans. Now, basically, with pre-existing conditions, if you have any type of pre-existing condition, high blood pressure, diabetes, back pain, it really does not matter. In order for your coverage to include coverage for your condition, it has to cover pre-existing conditions. Now, as you can see, indemnity plans do not, short-term medical plans do not. The only coverage that will cover a pre-existing condition, as you can see, is your marketplace ACA coverage. Now, as far as preventative coverage, you're also going to see the only type of coverage that covers preventative coverage is also ACA. So if you go in for your wellness check-in, you have a indemnity insurance plan, you're going to end up paying a lot of money for that. Same thing goes for your short-term medical plans. These wellness visits, they can be very pricey to the insurer. Now, if you don't have the right coverage, don't be surprised if you end up with a bill of $300 to $400. With ACA coverage, it is included with the insurance, 100% coverage. Now, as far as your coverage maximum, you'll see with your indemnity plan, you're capped. What that means is the plan has a maximum benefit. Sometimes $50,000, sometimes $100,000. I've seen up to a couple million in the lifetime maximums. But I'd like you to understand, if you have a plan that only covers up to $100,000 and you end up with a really big and expensive bill, you might be on the hook for a huge amount of money. It happens. Now, the same thing applies to your short term. These are the plans that are typically capped a little higher than these. These particular plans are typically not very good. Then as far as your ACA, one of the laws that they mandated is that the insurance must be uncapped. So if you end up with huge multi-million-dollar claims, not very often, but if it happens, you can know that your ACA insurance plan will cover you from $1 till the end of the medical bills. Very important to know. Now, your prescriptions, if you're taking any prescriptions now, just remember that's a pre-existing condition. So no insurance company that does not cover pre-existing conditions is going to cover your prescriptions without some sort of discount. Usually what you'll see is just a discount with these types of plans. These types of plans also offer discounts. Sometimes they'll offer you like a small $10 or $25 benefit towards the purchase of the medication, but it can still be quite pricey. The only types of plans that really have a copay to your prescriptions, again, would be your ACA types of plans. Now, keep in mind, with your more expensive brand name medications, even the ACA plans are expensive with your prescriptions at times. There are deductibles that are included. Sometimes these deductibles run into your major medical deductible, and that can be $5,000 to $6,000. So you got to keep in mind when you're picking out your plan to make sure that your prescriptions are covered. Now, as far as when you can enroll, the only thing that has a deadline is the ACA. The rest of the plans are available year-round. You can enroll in an indemnity plan or a short-term plan year-round. The ACA, you have open enrollment November 1st to December 15th. If you're not in between that window, you're going to have to get coverage through what's called the special enrollment period. That's what this means, special enrollment period. If you get married, if you just lost your insurance through work, if you lost your Medicaid, if you have a child, if you move outside of your coverage area, you would be eligible for what's called a special enrollment in order to enroll in a new plan that would start on the first of the very next month. They give you 60 days to make that change. Now, as far as your doctor office copays, your actual insurance benefits. Now, with indemnity plans, the way that they work is very simple. They have a doctor, and if the doctor's in the network, you're going to get a discount on that visit. So they're going to probably tell you the discount is a lot higher than it normally is. I would say the discount's probably 10 to 30, 40% at the max. Granted, some things are higher discounted. Things like labs, not very expensive. You can usually see discounts from indemnity plans up to the 70 to 80% for those types of tests. Same thing applies for your short term. The way that they work is you get a renegotiated rate based upon your doctor or your provider being inside of the network. If they are inside of the network, you will get a renegotiated rate. With the indemnity plan, you will then have the plan pay out a certain amount of dollars towards that particular claim. Any difference is your responsibility. Now, I want you to understand, doctor office visits are not why you buy insurance. I know it makes sense to make sure you can see the doctor, but you're never going to go broke over a doctor office visit, okay? Yes, with your ACA plans, you'll typically have a straight copay, unless you don't have a copay with your plan, and if that's the case, I feel bad, because if you do see that doctor, you're going to be paying the full price minus the renegotiation, and it's going to go towards that deductible of yours. Okay? Now, keep in mind, this is where your life is going to get hard. If you end up in the hospital with an indemnity insurance plan, you're going to be in a problem. And the reason why, yes, they're going to get you the same discount as far as the renegotiated rate, but I want you to understand what hospitals are paid by the indemnity plans are normally not very much. I see a lot of plans, they pay $500 a day in the hospital, $1,000 a day in the hospital, $1,500 a day in the hospital. I don't know if you've ever been to the hospital or seen hospital bills, but they can be much, much, much more expensive. And if you don't have the right coverage, end up in the hospital, you might end up filing bankruptcy from that medical bill. Okay? With your short-term medical, if you end up in the hospital, you typically have a deductible and then co-insurance to be met. And once that is met, your policy would cover 100% of covered medical claims up until the plan's limit. Again, that can go up to $2 million with certain carriers. Now, with your ACA policy, it's going to operate very similar to this particular plan, where it has a deductible and then it has co-insurance up until your max out of pocket. Depending on the plan that you have, it might be $6,700, it might be $8,150. It really must be something that you look into. You should know what your plan maximum is, because you definitely need to know how much exposure you have for different medical claims. Maybe you might want to include some sort of accident coverage, because think about it, the majority of people who end up in the hospital are there for one of two reasons, either an accident or a sickness. You can cut the accident out by getting yourself some sort of accident coverage, and if that was the case, your accident plan would pretty much cover your deductible and co-insurance in full. All you would have to do would be maybe pay an accident plan deductible, a couple $100, but at the same time, it would save you a ton of money if you ended up in the hospital. Okay? Now, I want you to understand, these plans are not horrible if you use them correctly. And the way that you use them correctly is by backing up one of these plans with one of these plans. So a lot of people, what they do is they go with a very inexpensive or the most inexpensive bronze plan that you can get through the marketplace. One that covers nothing besides catastrophic insurance. God forbid, a deductible, a max out of pocket, end up in the hospital, have to have open heart surgery, you don't have to worry about getting a bill for $100,000. If you have this type of coverage and you end up in the hospital with open heart surgery, you should be close to whatever their maximum out of pocket is. If you only have this and you end up in the hospital with open heart surgery, you're going to end up with a huge medical bill. You are. So now you can understand a little bit more about what's important in health insurance, the different types of insurance plans that are available. Hopefully you understand the types of questions you have to ask the insurance broker to make sure that you don't end up SOL, as they say, or up a creek without a paddle. Because the last thing I want for any of my clients is to have to explain to their children why they have to go into bankruptcy. Why do they have to move? And it's all because of lousy insurance. Keep in mind, I'm here to help. If you have any questions, by all means, reach out to me. I'm licensed in 12 states. I also have colleagues that are around the entire United States of America. We can definitely assist you with real insurance products. If you have any questions, by all means, reach out. Thank you for your time and have a wonderful day.